Welcome back to MIC's new video series, Trading Basics. This is episode 2. I'm your host, Joe Kelly. I'm one of the moderators of the MIC room. I'm excited again to share this new episode with you. But before we get into it, please enjoy the smooth, relaxing melody of this elevator music as you take a moment to read this education-only disclaimer. Alright, so let's jump right into it. We're going to go over order types and order entry. The first order type is a buy order. This is an order you submit when you want to buy X number of shares of ticker XYZ. A sell order. This is an order you submit when you want to sell X number of shares of ticker XYZ that you just bought earlier. Selling short. This is an order you submit when you want to short X number of shares of whatever ticker that you have borrowed from your broker. You first have to borrow the shares before you can short them, and you have to have a broker that has shares available to borrow. MIC has special brokers for this reason exactly. This position is a negative position since you are selling first. Buying to cover. This is an order you submit when you want to cover X number of shares of the ticker you had just previously shorted. Now, there are two basic aspects to an order. One aspect is the price, and one aspect is time. A limit order has to do with price. This order is the order you submit to say you want to buy X number of shares up to a certain price and no more. This is the safest and most recommended. A market order. This is an order that you submit when you want to enter or exit at any price, but beware, this order is dangerous as you are not guaranteed to fill at any specific price. The more liquidity there is, the less you have to worry, but the lower the liquidity, we definitely do not recommend using a market order. In any case, best practice is to always use a limit order. The day plus, these are executed during pre-market, regular, or after-hours sessions and are automatically canceled at the end of the trading session that day. Good till canceled orders will be executed during pre-market, regular, or after-hours sessions but remain live until canceled or executed. Stop orders. There are 4 common types of stop orders. The first one we have is a trailing stop. This is a special type of trade order where the stop loss price is not a set single absolute dollar amount. Instead, it could be a certain percentage or a certain dollar amount above or below the current market price, and it moves with the price as the price moves in your favor, maintaining that set percentage or dollar amount so that just in case price moves against you, equal to or greater than that set amount, you will be stopped out. Market stop. A market order to enter or exit at any price once that set price is hit. Very similar to a market order in general. Range stop. This order consists of 2 prices and will execute if one or the other is executed. So that means that you have a stop loss and a profit target. If one of those is hit, the order executes. It's just one order though, with 2 prices. A limit stop. Same as a market stop, but with a limit order instead of a market order to ensure less slippage. OCO orders, or one cancels the other. This consists of a target exit and a stop loss order. If one is executed, it cancels the other so that you don't get executed again at a price you didn't want. Very valuable for part-time traders or as a fail-safe in the event of emergency. For example, a power outage, a dirty diaper, a bodily function, increase in appetite, mocha craving, daycare, dog ate your homework, flat tire, heavy traffic, forgot to set your alarm, Taco Bell run, looking at another screen, and then a newsletter alert happens and you're too busy surfing ESPN stats for your fantasy draft to notice that you should have either been taking profit or eating a loss. That one's a little personal. Also, you can use this order to scale in and out of a position. Inefficient Market, or Nico in MIC, does this all the time, and he is great at it. If you ever have questions regarding scaling in and out of the position using OCOs, I really recommend you send him a PM. Next, we have level 2 in time and sales. Right now, I'm just going to go over the montage contents and just explain them in detail to you. That way that you understand and are familiar with what you are seeing. Level 1 data is listed right here. It's simply just the best bid and the best ask. The last price can be found right here. This is simply just the last price that was executed. The volume can be found here. This will always increase as trades get executed at whatever X amount of shares they're executed at. Previous closing price can be found right here. If you are ever in chat and you see somebody say green-red or red-green move, this is the price level they are referring to. The stock is going from being red on the day and crossing over this previous close, or it is going from being green and crossing down to being red. Tick, that is this arrow right here. It's an uptick or a downtick. That refers to the tape over here. So red prints, downtick, green tick, uptick. The bid is this side of the level 2. These are the people willing to offer this much money for it. These people over here are the people willing to sell their shares at this price. The ask size and the bid size are on the right side of each of those. On this particular montage, the size is divided by 100, so you have to add 2 zeros to each of those numbers to know exactly what size you see there. The MMIDs are these people here. They could be individuals or they could be firms. They quote both a buy and a sale price in the stock held in inventory, hoping to make a profit between the bid and the offer spread. They're often referred to as market makers or MMs or MM. Order entry is this area down here, and I will be going through a live example of submitting orders in a moment. This legend over here, the at ask, inside, at bid, below bid, this color chart is to reference what is happening on the time and sales over here. These prints that are green are happening on the ask over here on the right side. The inside executions are happening between the best bid and the best ask. They're happening within the spread. The spread is the difference between the bid and the ask. So 2 cents, 4 cents, 20 cents, whatever it is. The wider the spread, the more risk associated. At the bid are the red prints. That means that they are happening on this side. Below the bid are the pink prints, and those are often referred to as panic prints. Okay, so let's go over some order entry here. Here is Apple's montage. We are in after hours right now, so you don't see any price movement or anything like that, but I want to show you guys how to enter some orders. So right here we have our share size. We can arrow up and arrow down. With that right there, it'll go 100 share increments. This P right here stands for position. If I held a position in Apple, I could click that P and it would show my position there, my share amount. This display button right here is if I only want to display like 100 shares. This is how you can hide size on the level 2. If you didn't know that, welcome to level 2. You can hide size and everything. Here you can submit different routes, limit, market, stop, and so on. So we're going to walk through doing a stop order. We're going to set this stop right here. We got to change our montage style to, let's put it as an OCO, just to show you how to build this. So we're going to do a profit target up top first. We're going to set this up here. We're going to choose like ARCA, and then we're going to choose our price. let's say 157.90. Since we're long 1,000 shares, we want to sell at 157.90. And then down here, we are going to change this to sell. And then we're going to set 1,000 there. And our route is going to be stop. And then our time in force. This is that day plus and so on and so forth. Right here, you've got all kinds of different options. The day plus means that it's going to be for the day and for extended hours, meaning pre-market and after hours. Day is only during regular trading session. IOC, instant or cancel, good till canceled, at the open or at the close. If you want to set an order to get you out specifically at the close, or you want to short at the close, or you want to sell at the, or whatever it is, these are timed entries. You can tell it that I want an order to go live right at the open, or I want an order to go live right at the close, whatever it is. This stands for fill or kill. 1 minute, 2 minute, 3 minute, 5 minute. This is how long the order stays live before it cancels. 10 minute. Stop type. We're going to choose day plus, and then we're going to go over here to limit our trigger price. Let's say if it drops below 157.35, we want to get out as low as 157.30. So that would be considered a 5-cent slippage. 157.35 triggers. You're going to sell your position down to 157.30. Another quick tip we wanted to share with you guys. This is a trick from Nico, or Inefficient Market. I got to give all the credit to him. This is his technique for reading tape that he wanted me to share with you guys. On the right side, you obviously have your level 2 and montage there, but on the tape right next to the level 2 that you see all of the action happening on, this is not filtered at all. These are the prints that are happening at any size, and that is the full tape. On the left side, though, Nico likes to use the trick of filtering it to only show orders that happen equal to or greater than 4,000 shares. This helps him understand where the size is happening on the tape. Are the sellers hitting the bids with big size and trying to take them out, and there's a hidden buyer on level 2 that's just absorbing this size and not budging? So on and so forth. There are many different ways to read tape. It is an art form, in my opinion, more than anything else. It is a very good edge, but this helps focus in on where the big prints are happening and where the little prints are happening, because the little prints don't mean as much as the big size. Thanks so much for watching this episode of Trading Basics. I hope you enjoyed it just as much as I have. We're going to be doing several more of these. We're going to be going over brokers. We're going to be going over the PDT. We're going to be going over software, some walkthroughs on that stuff, and setup as well. I look forward to sharing that with you guys. If you have any questions at all, please feel free to shoot me a direct message in MIC's chat. Again, my chat screen name is Joe Kelly. Thanks for hanging in with me.